had a lot of people today that were sick.
Oh. I was like, there's like nobody.
I know. Well, and students may not have thought that we were having class in class today.
I know, I was panicking last night because I was like, are we in class or virtual?
Sorry. Yeah.
But I was waiting until like
So,
today.
yeah. So the assumption is it's in class unless I say otherwise. So. Two types of FLSA coverage. So, it's like most of you got individual and enterprise coverage. That is correct. So remember, the entire enterprise could be covered if it meets those requirements. And I'm not going to say what they are because I have another question regarding those requirements coming up. But if the enterprise meets the requirements and everybody in the enterprise is covered by the protections of the FLSA. However, if the entire enterprise does not meet those requirements, there's still the possibility and actually probability that that individuals within the enterprise will be covered by the FLSA. Okay, so we've got individual and enterprise coverage. Let's see. All right, next one. So with enterprise coverage, what is the dollar limit above which, I didn't, but forgive my English here, above which annual sales must reach for an enterprise to be covered? Oh, that's kind of probably not as clear as it could have been. I was rushing. So there's a dollar limit. Remember, an enterprise has to have a certain amount of sales in order for the enterprise to be covered. Gross sales. Does anybody remember what that is? Is that up? Is that the one that's active right now?
Yeah.
Okay. A little glitch there. You could use K for 1,000 if you wanted to. I don't know why it's doing that. But yeah, so 500,000, yeah, there we go. $500,000. So once the enterprise reaches that $500,000, then that would be one of the requirements for FLSA coverage. Okay. Next up. So this one you might have to look at your notes or what we did, what we talked about on Tuesday, that agenda that was up. What is one factor that is used in the economic reality test when assessing whether a worker is an independent contractor or an employee? Remember, we had 6 different factors that are looked at equally to determine whether or not a worker should be classified as an employee or an independent contractor. Nature and degree of control. Degree, I like that. Like I said, you're welcome to look back at what we looked at as well. Most of it comes down to control. Who has the control over how the employee does their job, where they do their job, when they do their job. But there are some other factors as well that come into play. Degree of integration, yep. All right, so let's take a quick look back at what those were, just as a reminder. So, the opportunity for profit or loss, depending on managerial skill. So if there's an opportunity for profit or loss in the activity that they're engaged in, then that may be an indication that the individual, that the worker is a independent contractor as opposed to an employee. The investments made by the worker and by the employer. Who's paying for the equipment in order to do the job, right? Who's paying for the computer? Who's paying for the software? Who's paying for the vehicle if there's travel involved? That sort of thing. The degree of permanence of the work relationship. So is there a definitive contract there? Now there are exceptions to that, obviously. You think about, there are employment contracts that do exist, but is it something that is of a you're being hired to do a job, and once that job is finished, you're going to move on to the next job, that sort of thing? Or is it assumed that unless you get fired, unless you get let go or laid off, or something else unforeseen happens, that you will continue to work there, right? That would indicate an employment relationship, whereas the other scenario of having a contract or a shorter term definitive time period that the work is going to be done, that would be indicative of a independent contractor. Nature and degree of control I had talked about. So who has control over how, when, where the work gets done, right? The extent to which the work performed is an integral part of the employer's business. I used the example on Tuesday, I think, of an office that hires house or cleaning services, right? So the cleaning services, if they're not a cleaning company, then the cleaning services are not really an integral part of what that business is doing, and so chances are in that scenario, the individual would be an independent contractor. Skill and initiative required to perform the services. Again, that one, obviously that one's not going to be definitive in and of itself, because there are a lot of positions, employment positions, where skill and initiative is required even though you're an employee. Yeah, of course.
What if you have like a larger scale, like cleaning business, and it's like a lot of people? Is it still a contracted business, or like what would that?
Right, so that would still be probably a contractor if you're hiring a business in to come and clean your office space. The person that's doing the cleaning is most likely an employee of that cleaning business, but they're not an employee of the location where they're actually doing the work.
Okay.
Right? Yeah. Other questions? That was a great question, by the way. Oh, okay. So those 6 factors, again, no one factor is definitive. All of them taken together would be analyzed. And there are, the IRS does offer a way for businesses who are not really sure how to classify an employee. They offer them a way to review the facts and circumstances and make a determination beforehand if they so choose. The repercussions for misclassifying a worker as a contractor when they should have been classified as an employee can be pretty stiff. The penalties for that can be quite high for employers, and it's a very common mistake. There's a lot of just honest mistakes by employers. They really don't know this stuff. but they can get into some trouble by not knowing it. Any other questions about it? Okay. Remember, we looked at that checklist as well. Okay. Last one here. What are the 4 main protections or requirements covered under the FLSA? So there were 4 things that we talked about, that main things that the FLSA does. And these protections are for employees, but the requirements are on the employers. We started talking about 2 of those things on Tuesday. We watched a couple of videos about them. And those are the 2 items that we're going to focus mainly on in this class. Good. Overtime and minimum wage, those are 2 of them. Yep. And those are the 2 that we're going to focus on in this class. There are 2 others. Child labor. Yep. And record, I know that's kind of all over the place there. Record keeping. Exactly. So there are record keeping requirements that are placed on employers that are part of the FLSA as well. So those are our 4. Minimum wage, overtime, child labor, and record keeping. Now there was one article that I didn't really get a chance to cover last week that I wanted to share with you. It's still on the agenda up there with regard to child labor. So I started to sort of talk a little bit about this. Oh, please come up. There we go. Hello. No, maybe it's not jumping to it. Okay, maybe I have the wrong link. I was in a little bit of trouble right now with a law that they recently passed. Here we go. Iowa child labor law conflicts with national restrictions on dangerous workplaces. Iowa's new child labor law conflicts with federal regulations by easing some restrictions on teenagers working in potentially dangerous conditions, the U.S. Department of Labor wrote in a letter to Democratic lawmakers. Solicitor of Labor, Simananda, Wage and Hour Division, Principal Deputy Jessica Lumen replied to questions, yada yada. So the measure signed into law in May loosens restrictions on some child labor regulations in Iowa. Under the new law, minors over the age of 16 can sell and serve alcohol in restaurants, while kitchens remain open. 14 and 15-year-olds can work longer hours and more hours a week, and 16 and 17-year-olds can seek exemptions to work in restricted fields with dangerous working conditions as part of a work-study program or employer training. Department of Labor officials wrote that the changes to restrictions for workers ages 16 and 17 in potentially dangerous fields violates federal law, and they're referring to the FLSA there. While federal law also allows teens to be employed in some hazardous occupations through student, learner, and apprenticeship programs, the Iowa law would allow 16 and 17-year-olds to work in demolition, heavy manufacturing, and to operate certain power-driven machines, work prohibited for minors under national child labor laws. Iowa's law also conflicts with federal regulations because it doesn't require the registration of employers or student learner programs that employ teens in potentially dangerous fields through learning programs. So that would be a record-keeping requirement labor officials wrote. Federal law requires training and work-study programs to register through the Department of Labor or through a state agency before employing minors to ensure work conditions meet state and federal standards. Okay. Despite Iowa loosening these requirements in state code, most employers are still subject to the federal Fair Labor Standards Act, according to the letter, and those in violation could be subject to penalties. While states can pass more protective laws, states cannot nullify federal requirements by enacting less protective standards, and it goes on there. I don't know why that didn't jump to that. So just kind of a little current issue. I don't quite know how that's going to be resolved, but because Iowa law is less protective, that means that federal law would be controlling in that situation. Okay, so any employers that were following Iowa law could potentially get in trouble with the federal government for not following federal law in that case. All right. Any questions before we move on? Today we're going to talk about minimum wage. I'm going to go through some of the PowerPoint slides, go through some examples. And we're going to get into tipped employees and the tip minimum wage, which if any of you have experience in working in a tip profession, you already know that the minimum wage for tipped employees is different than the $7.25. Well, I shouldn't say it's different. It's still $7.25 an hour. However, the assumption is it's shared between the employer and the tips that are received by the employee. There's still a requirement that employers reach that $7.25 an hour minimum amount, but they're allowed what's called a tip credit against the $7.25 an hour to apply tips that are received toward that minimum wage. So essentially, when you're going out to a restaurant and you're tipping your waiter or waitress, you are subsidizing the salaries that the employer would normally have to pay when you're doing that. So we're going to talk about that calculation. We're also going to talk about overtime and exempt versus non-exempt employees. I know we've got a lot of terms here. We've got enterprise coverage and individual coverage and exempt, non-exempt. Where you're going to see a lot of dichotomy in a lot of the subjects that we cover. Okay, so let's start out talking about minimum wage. If this will come up. I was having such issues with bringing this up earlier. Here we go. Okay, so we know the amount of the minimum wage, right? $7.25 an hour is the amount of the minimum wage as it's set currently by federal law. But included in that $7.25 an hour, employers are allowed to include other types of remuneration being payment. So commissions. If an employee receives commissions, those commissions can be included in the calculation of $7.25 an hour. Meaning essentially that the the hourly rate is allowed to be less as long as those commissions then raise the total amount up to $7.25 an hour. Earned bonuses, and it's non-discretionary bonuses. We'll talk about what discretionary bonuses are down here, so I'll get back to that non-discretionary bonuses. So bonuses that are earned can also be included in that calculation of minimum wage. Any severance pay that is paid can also be included. On-call pay, so if you're in a profession where you're not necessarily working, but you are getting paid to be available to come in, that on-call pay can also be included in the calculation of minimum wage, or if there are any shift or weekend differentials, you get a different amount for working some odd shifts or on the weekends. So discretionary bonus is a bonus which is not agreed upon or promised beforehand. So in that case, it's not included in the regular rate of pay. So for example, out of the blue, you get a bonus of $200 because you've been there for a year, or you've had great attendance, but you weren't expecting it, right? It wasn't something that you were expecting. In that case, it's essentially it's at the discretion of the employer. They can give it to you or they cannot give it to you. In that case, those discretionary bonuses are over and above the minimum wage. Non-discretionary bonuses are those bonuses that you already know about. You know what the goal is and how to attain that bonus. So my example of the attendance bonus, if you knew that if you had perfect attendance for 6 months that you would get a $200 bonus, then that is a non-discretionary bonus. It's given to everybody, right? As long as you meet those requirements. Those are the types of bonuses that are included in the calculation of minimum wage. Those discretionary bonuses, the whim of the employer, those are not included in the calculation. So some other types of compensation that are not included, gifts made as a reward for service would not be included. Profit sharing plans also would not be included when no work is performed. So vacation days, holiday, sick day, jury duty pay. So if there's a guaranteed minimum number of hours paid that are more than the actual hours worked, that is not included in the calculation. Tool allowances, uniform allowances, back pay that is infrequent and sporadic, longevity bonuses. So just some other types of payments that could be made that are not included then in the calculation of that $7.25 an hour. There are some instances where employers can pay less than $7.25 an hour, and where the tipped employees is one of those areas that we're going to talk about. But there are some other instances as well. A training wage. So if an individual is less than 20 years old in their first 90 days of employment, if they're newly hired and they're in training, they can get paid $4.25 an hour for that training wage. Colleges and universities, retail service establishments, and farms may employ full-time students at 85% of the minimum wage. Now, I know a lot of these instances, they're not going to find employees to work those jobs right now. And the actual minimum wage is $7.25 an hour. Most employers these days are paying more than that because for economic reasons. They simply cannot find employees to fill those positions at that rate. So those are just a couple of instances. There's one of the other instances that your book talks about is individuals with disabilities may be paid if the employer has a certificate on file. They have to apply for it. They can pay individuals less than minimum wage. So think Goodwill. Goodwill is one of those organizations that does when they hire individuals with developmental disabilities, they are allowed to pay less than the minimum wage for those employees. And some other circumstances as well. Now there are some instances as well where employees have to be paid more than the minimum wage. Federal contractors have to be paid more than the minimum wage. What's a federal contractor? So a federal contractor, any employee, and again, these are employees we're talking about. We're not talking about, so it gets a little bit confusing here. Federal contractors, I'm not talking about independent contractors here. I'm talking about people who are working on projects for the federal government. Now, they may be employees of another company that's contracted with the federal government, but federal contractors are required to be paid more than the minimum wage. Also, there are lots of states nowadays that have a higher minimum wage. In fact, I would venture to guess that that the majority of states have a minimum wage that is higher than $7.25 an hour. I believe every state surrounding Iowa has a minimum wage that is higher than $7.25 an hour. Iowa's minimum wage is set at the federal rate. There are states that have no minimum wage on their books. There's nothing, or their minimum wage on their books is set lower. But remember, the federal minimum wage is going to apply to any employees within those states because it is more protective of the employees. Okay, questions yet? All right. So I already talked about, so these are some of the states that have no minimum wage, I think. Alabama, Louisiana, Mississippi, South Carolina, and Tennessee. Now, like I said, the employees within those states still have to be paid the federal minimum wage. And again, chances are the wages are going to be higher than that just because of the economic reality, supply and demand, all that stuff. So you've probably heard of this term living wage. Living wage isn't really, there's no laws on the book saying that somebody has to be paid a quote unquote living wage. Living wage, that whole concept is essentially people being paid enough to live in the area in which they live, that keeps up with the cost of living. Essentially, you'll see these living wage. There are some cities, mostly I think West Coast cities. I don't know if there are any on the East Coast. Don't tend to see this too much in the Midwest, that have ordinances that require what they call a living wage. Now, who decides what a living wage is? It's probably the legislators or the city council members that live in that city. So, but again, that's kind of a subjective term, right? But there is no like federal living wage. And in fact, in Iowa, there is a law on the books that says that cities and counties cannot set their minimum wage different from the state minimum wage. I think a few years ago, Iowa City tried to do that. They tried to set a higher minimum wage within the city limits, and the state government said, no, you cannot do that. I don't know if they passed the law then or if it was already on the books. But cities and counties in Iowa are not allowed to have a minimum wage. It's different from the state minimum wage. Yeah.
What would be like a few examples of businesses that would do, or employers that would do business with the government? Like, would that be like federal buildings, or would that be just like anyone that's?
Well, there are lots of businesses that do business with the federal government. Raytheon, aerospace industry, they're private businesses, but they have essentially their bread and butter is contracts with the federal government. So they would be required to have certain higher minimum wage standards. There are lots of food service companies. Like when you go to Washington, D.C. and you go to a cafeteria in one of those federal buildings, I mean, those employees most likely are not employees of the federal government. They're employees of a company that is contracted with the federal government to provide those services. So that would be a couple of examples there for you. Mm-hmm. Any other questions? No? Okay. So let's talk a little bit about tipped employees. So who is a tipped employee? First off, it's anyone who regularly receives more than $30 a month in tips. And it says also customarily. So, if you're in an industry that doesn't customarily receive tips, and I don't know about you, but it seems like almost everybody these days is receiving tips. But the $30 a month, if they regularly receive $30 or more per month in tips, then they are considered to be a tipped employee, and these minimum wage rules would apply. So the minimum wage for a tipped employee is $2.13 an hour, significantly lower than $7.25 an hour. That means the employer, at a minimum, has to pay that employee $2.13 an hour for regular hours worked. And then the employee receives tips on top of that. Now, how this works is the tips have to at least get the employee up to, on average, that $7.25 an hour. And if they don't, then the employer has to make up the difference. So, let's see. Well, I guess we already said that. So $290 a week is essentially $7.25 an hour times 40 hours, the standard work week. So this is the goal, right? Tipped employees, if they're working 40 hours. Now, if they're working less than 40 hours, that would not be the goal. It's however many hours they worked times the $7.25 an hour. If they worked more than 40 hours a week, they are entitled to overtime pay as well. And we'll talk about how that is calculated. So you'll notice the 213 plus the tip credit. It's called a tip credit. This is a credit that the employer receives as long as that the employer receives that the tips are supposed to make up for. So we've got $5.12 an hour is the tip credit. So you add those two together and you get up to $7.25 an hour. Okay? Like I said, if the employee has not made enough in tips to, on average, get them to $7.25 an hour during that week, then the employer has to make up the difference. You look like you're going to ask a question. Oh, okay. So we'll look at some calculations here. Now, you'll see there's a different amount as well for federal contractors, tipped employees who are federal contractors. Their minimum wage is set at $10.50 an hour. And the tip credit, their minimum wage is $15 an hour. The employer has to pay the $10.50 an hour. So the tip credit is not $5.12 an hour, it's $4.50 an hour. Let's look at an example here, and this includes some overtime, by the way. And you do have some homework problems where you have to calculate overtime for tipped employees. So we got Raquel. She works 47 hours at Christchurch Bar. She's a tipped employee. She averages $750 in tips per week. If her employer takes the maximum tip credit of $5.12 an hour, this is how we're going to calculate her gross pay. Now, keep in mind, when we're talking gross pay, we're talking about the amount that the employer pays her. Okay, she's already received the $750 in tips. She got that in cash directly from the customers. But the employer owes an additional amount to her as well, regardless of how much she received in tips. So the calculation for that, we would do, so 40 hours is at her regular rate of pay, $2.13 an hour at 40 hours. So that's over here. Then we're going to calculate the overtime on her tipped income. Now, $10.88 an hour, where does this come from? That comes from $7.25 times 1.5. It's $10, I think it rounds. Come here. Oh, this is a problem. There we go. Get a calculator up. So 725 times 1.5, and I know we haven't gotten into overtime yet. I wish they wouldn't put this, I probably shouldn't even be going through this example right now, but $7.25 an hour times 1.5 is $10.88, rounded. So this is the minimum wage overtime rate. the tip credit itself, that $5.12 an hour, doesn't change. So this means that the employer is going to have to come up with additional, more than $2.13 an hour for those additional 7 hours that she worked. So 1088 minus the tip credit gets us to 7, I'm sorry, it's probably hard to see that. So 725 times 1.5, 8, minus the tip credit. So 6, 7, so $5.76 an hour. That is the overtime rate for those 7 hours that she worked overtime. So we have to calculate the regular hours separately from the overtime hours and then add them together. Okay, what they've done here, so the 576 times 7, and again, this is the amount that the employer has to pay her. She's got the $750. 4032. So this is her overtime that the employer pays. So 290. Oh, sorry. That's correct. 213. 213 times 40 hours plus 576 times 7 hours. I can't remember how much that is off the top of my head. 40 times 213. 85. 80. So this is the amount that the employer has to pay her. Plus she got the $750 in tips. Okay? So the $750, because the $750, sorry, no, that's covering this up. Because the $750 in tips more than makes up for that tip credit, the $5.12 an hour times the number of hours that she worked, the employer doesn't have to pay her anything additional on top of that. But if she didn't make enough in tips, then the employer would have to pay an additional amount to get her up to that point. You look like you're going to ask a question. No? Okay. We'll go through more of this, don't worry. I know it's a bit much right now. Okay. So let's look at these other examples here. We've got a 40-hour work week. Tips are $43. So remember, if they worked 40 hours, they've got to make at least $290 in combination with tips and what the employer pays, right? So that's our minimum here for 40 hours. If they made $43 in tips, then probably without even doing the math, we can figure out that they didn't make a total of $290 during the week, right? So if this is our goal, $290, and they made $43 in tips, and the 213 times 40 is 8520. We can see plus 43. 8. They made $128.20. If they are only paid $2.13 an hour, this means the employer is going to have to pay them more. They've got to get them up to $290. Right? Because they worked 40 hours, the employee has to make at a minimum between tips and what the employer pays, $290. Does that make sense? Yeah.
So if the employee is not like working up to the 40 hours a week, does the employer ever have to reach the
No, it would be a different amount. So let's do an example of that. Let's say instead of 40 hours, let's change this. Let's say they worked 30 hours. Now, the minimum amount that employee has to make, erase this here, $725 times 30. Whoops. Yeah, $217.50. Okay, so that's our goal. They've got to make at least $217.50. If they made, so this is going to change to 30 as well, right? So this calculation is different. $63.90. They made $106.90. The employer's going to have to make up the difference. Does that make sense? Okay. When there's overtime, well, I mean, when the hours are different, the amount changes, or goal changes for that week. When there's overtime, let's just say it was 50 hours. All right. So our goal in this case would be $725 an hour times 40 hours plus 1088, and I get that by taking 725 times 1.5 times 10 hours of overtime. And then we're going to add those two together. So 720, so that's 290. 1088 times, well, I should be able to do that in my head, shouldn't I? 0880. Now our goal is 398.80. The employer has to make sure that employee, through tips and a combination of tips and their payment, makes $398.80. Okay. This other example here. Reported tips are $1,189. Well, look, $1,189. We know that they're going to be, unless they worked more than 168 hours in the week, which that's how many hours there are in the week. We can pretty much guess that they're going to be fine. The employer's not going to have to pay them more than that $213 an hour, right? The employer's not going to have to pay them more than that, their minimum wage. That minimum wage only increases when the combination of tips and $213 an hour times 40 hours, or how many hours they worked, does not get them up to what our goal is. Okay, so my best advice is when you're working these problems, figure out what your goal is. See what your goal, what that employee would have to make if tips weren't even involved, right? So $725 an hour times 40 hours plus, if it's overtime, however many hours over 40 in that week, and add those together. That's your goal. And then see if they didn't make up enough tips, if they didn't make up enough, so you also have to, so you've also got to figure in, though, that the employer has to pay at a minimum, for at least for 40 hours, a minimum of, what is that, 80, can't remember, 85.20? If it was just for the 40 hours. So you've got to figure in what the employer is obligated to pay as well. And the difference is what you have to make up. Let's see. Some other pieces, service charges cannot count toward the tip credit. If 75% or more of the employees agree, the employer and the IRS can determine a tip rate for employers' various occupations. This means that the employee, employee doesn't have to calculate what their actual tips are. They'll figure out a kind of an average rate. If there are 2 jobs performed by one worker, the tip credit can only be applied to the job that qualifies as tipped employment. So if you're working as a server and you're working as a maitre d', those are two different professions. Maitre d' would not normally get tips, so that tip credit would not apply to any hours worked in that position. All right. Oops. Hold on just a second here. Questions? The tipped part is the part that students trip up on the most. Well, I shouldn't say the most. When calculating wages, that's probably the hardest part of this chapter, is those tipped employees. Okay. Mm-hmm.
So kind of going back to like the child labor laws, is that
I'm sorry, the what?
going back to like the child labor laws?
Mm-hmm.
Like, are there any exceptions that are made for like family businesses, for instance?
Well, there are exceptions in like agricultural industry, absolutely. Whether there are, I don't know off the top of my head for family businesses if there's an exception with regard to dangerous machinery and that sort of thing. The child may not be considered an employee anyway under those circumstances, right? What's that?
So it would just be chores.
Exactly, exactly. Paid chores. But that's a great question. Let's see here. Let's see if this works now. Oh my goodness. Is Canvas just really slow today? Is anybody else having? I'm having a heck of a time. I don't know if it's the. I just download it. Here, just do this. Well, that worked. All right. Now here's this word, non-exempt. Minimum wage. So covered non-exempt employees must be paid at least the federal minimum wage. So that means that there are exempt employees that we're going to talk about as well. With regard to the hourly minimum wage, and I know we haven't defined exempt and non-exempt yet, but with regard to the hourly minimum wage, that applies to non-exempt employees. Exempt means they are exempt from the wage and overtime provisions of the FLSA. Even though they work for a covered employer, you know, they're within an enterprise or they're an individual that is covered, they are exempt from the overtime and minimum wage provisions. Now that doesn't mean that they don't have a minimum wage. They do have a minimum wage, it's just not on an hourly basis, okay? But overtime, they are not entitled to overtime. So what we're talking about here solely applies to non-exempt employees. Those employees who are not exempt. So it's kind of backwards. Non-exempt, they're not exempt from the FLSA. Meaning the FLSA, the overtime and minimum wage provisions do apply to them, okay? So those are the employees that we're talking about here. And then there's the tip credit, let's see. Some other things that can be included in there, lodging, room and board can be included as long as lodging is regularly provided by the employer or similar employers. Employee voluntarily accepts the lodging. It's furnished in compliance with all laws, It is provided primarily for the benefit of the employee rather than the employer. So if the lodging is provided by the employer, but it's for the benefit of them, and there are certain industries where that is the case. You know, if I know the oil and gas industry will oftentimes build housing for employees to bring them there so that they can work in those fields, and that is for the benefit of the employer, right? In that case, the value of that lodging is not included in the calculation of minimum wage. Now, those employees are making way more than minimum wage anyway. Also, the employer has to maintain accurate records of the cost. So this is just another one of those items that could be included in minimum wage, and in addition to commissions and severance pay and those things we talked about. Deductions from pay are illegal if the items are primarily for the benefit or convenience of the employer and the deduction reduces employee earnings below the minimum wage. So, for example, if you are required to have a uniform and your employer makes you pay for that uniform, but they're requiring that uniform. Well, that uniform is for the benefit and convenience of the employer. If they deduct the cost of that uniform, that deduction cannot bring you below minimum wage. It cannot be so much that it is below the $7.25 an hour. Deductions for tools, damages to property, cash register shortages, believe it or not. So if you have an employee who is stealing from you, you cannot deduct that pay, what they stole from you, from their pay. You are not allowed to do that. I had a client once who had a bookkeeper that left on some unfriendly terms, and she changed all the passwords for the financial information before she left, which was a real pain because then they had to go and pay somebody to get back into their financial records. And they wanted to know, can they deduct that cost from her final paycheck, or can they withhold her final paycheck? And the answer was no. You have to pay her everything. If you want to pursue legal action against her, you can do that, but you cannot withhold it from pay.
So, for instance, I used to work at a grocery store, right? And
Mhm.
if our drawers were off, they would take like money out of our paycheck.
Yeah, they can't do that.
Oh.
Yep, they cannot do that. So register shortages, they cannot do that. That's a risk that the employer takes. Now, like I said, they can, if they suspect that somebody is stealing, or if you're just really bad at math and you're given the wrong change, well, then they can take action as far as reprimanding you for that, or maybe firing you because you're not, you can't really do the job properly, but they cannot withhold that from pay. So, and that's a good example, and a lot of employers, especially smaller employers, just are not aware of that. They're not aware of, there are a lot of responsibilities that come along with having employees. Okay. All right, so minimum wage, we already know how to do this. Whatever the hourly rate is, oh, well, this is an example here of if they were deducting uniform charges. So you calculate the hourly rate times however many hours they worked, subtract the uniform charges, they're making $210. Now, here's our goal. They need to be making at least $217.50. So this employee is not making enough. The employer cannot deduct that additional $7.50 from the employee's wages. So that one, does that make sense to everybody there? So you'd want to calculate what the rate is times the hours minus any deductions, and then compare it to the minimum wage times those number of hours. Okay, because that is our goal, whatever that minimum wage is. Okay, so tipped employee, again, $30 month. We talked about the tip credit. Let's see if we can get an example in here. Maybe not. I thought there were some examples in here of tipped wages. Okay, so what about hours worked? What is included in hours worked? You know, we've got, okay, this is pretty clear, they worked 50 hours. Well, how do we know that they worked 50 hours? What do we have, what do we have to pay them for? What's the definition of an hour worked, right? So, if the employee is providing service and they are not allowed to leave, if they are not providing service and they are not allowed to leave, those are hours worked. So if the employee is unable to, if they can use the waiting time for their own purposes, then you can deduct the hours. If that waiting time is controlled by the employer though, that is, they have to be paid for that time. If the employee is completely relieved from duty, so for an example would be, okay, so you work for a bookkeeping company and the computers go down and you really can't do anything. If your employer says you need to stay here, they have to pay you for that time. If the employer says, look, you can go home, we'll call you when it's up and running again, it might not be till tomorrow, then they do not have to pay you for that time because you are free to leave at that point. Let's see, what else do I want to say? On-call time. So if the employee has to stay on the employer's premises, then that would be included in hours worked. So they're just, again, they're kind of not free to leave. Or the time is so narrow that they cannot effectively use that time for their own purposes. They would have to be, in that case, they would have to be paid for that time. If it's not considered hours worked if the employee only has to provide their contact information, so, you know, they're at home, the employer then calls them to come in, the employer doesn't have to pay them for the time where they're sitting there waiting for a phone call to come in, because they can effectively use the time for their own purposes during that time. Now, a lot of employers do pay for on-call time, but they're not required to do so. Let's see. Short rest breaks would be included, so 20 minutes or less. Any bona fide meal period, which is typically 30 minutes or more, does not have to be paid. There are some states that have different rules for that. Iowa is not one of them. So Iowa does not require payment for lunch breaks or anything like that. Again, some employers do pay, but that's up to the employer. But if it's 20 minutes or less, and it's a break, then they do still have to be paid for that time. As long as these meal periods, as long as they're completely relieved of duty. So if you're a receptionist and you're sitting and you're eating your lunch and you're still answering the phone, that is not a rest period. That time has to be paid because you're still working. Training time also has to be paid. If it's spent in meetings, lectures, training is considered hours worked if it benefits the employer. So if, however, it's outside of regular work hours, and these are all ands, they're not ors, it's voluntary, so you don't have to do it. It is not job related, and the employee does not perform any productive work, then it does not have to be paid. Essentially, it's the employee doing it on their own time, right? Especially this attendance voluntary part. Although we all know sometimes voluntary doesn't necessarily mean voluntary. It's voluntary, suggested, advised, that sort of thing. Travel time. Time to get from home to the place of work is not hours worked. that is commuting time, employer does not have to pay for that time. However, any time spent traveling between job sites during the normal workday would be considered time worked. So if you are, again, I'll use the bookkeeping example. If you are a bookkeeper and you have clients all over Des Moines and you spend a lot of time traveling between those clients, your travel time has to be paid, right? Those are during the normal work hours. There are some special rules that we really won't get into, travel away from, so what I'm talking about here is like overnight travel, maybe you're going to a conference and you're flying somewhere, that sort of thing. There are some special rules with regard to what hours have to be paid for that. But sleep time. Yes, there are people who get paid to sleep. Is that a dream job or what? They don't actually get paid to sleep, but certain professions require sleep, right? Think long haul truckers, medical staff, that sort of thing. So if the shift is less than 24 hours, they're considered working even if they're allowed to sleep, engage in personal pursuits. They cannot deduct sleep time. If it's 24 hours or more, the parties, as long as they agree upon it, can exclude bona fide sleep periods up to 8 hours, but there are certain conditions that have to be met for that. Think also pilots that are going internationally, that sort of thing. But if it's less than 24 hours, they have to be paid for any of that sleep time. Let's see, where is this? So workers who do not permanently or for extended periods of time reside on the employer's premises, because, I mean, think about it, if you've got a place to sleep on the employer's premises and that's essentially where you're living, then that's sort of a different scenario there. They don't have to pay you for your sleep time then. The employer and employee can exclude hours from hours worked up to 8 hours spent sleeping if all of these are met. So the employer furnishes adequate sleeping facilities. Employee can usually enjoy 5 consecutive hours of uninterrupted sleep, and the employer and employee have an express or implied agreement to exclude sleep time. So there does have to be that agreement. So frequent violations. Working off the clock. I think we've all heard, there's been lots of stuff in the news about employees that have been forced to work off the clock, even in big employers like Walmart. So if you are cleaning up after a shift, that time has to be paid. Your employer can't clock you out and then say, go clean up your station. That cleanup time has to be paid. So any working off the clock time, waiting time, that's also a frequent one. If you are engaged to wait, you cannot leave. On-call time, if you're not free from duty or the employer's control, has to be paid. You can see a lot of this focuses on control, right? If the employer still has control over where you are and what you're doing at that time, then they have to pay you for it. Meal and rest periods, if you're not free from duty. Training time, travel time, if, travel between job sites and sleep time. So these are, all the ones that we just went through. There are frequent violations of those. Let's see. Okay, so we went through all of that stuff there. Oh, look, it finally came up. Questions. Let's talk a little bit about overtime. We'll get more into the calculation of overtime for tipped employees next week. But we'll make a little bit more time. So overtime. Everybody probably knows overtime is known as time and a half, right? You've probably often heard it referred to as time and a half. That means that you get paid whatever your regular rate of pay is, and that regular rate of pay has to be at least $7.25 an hour. whatever that regular rate of pay is, any hours over 40 in a week have to be paid at time and a half. So if your regular rate of pay is $10 an hour, working. Then the overtime rate, 0.5, is $15 an hour. Right? Easy. Now, what is considered a week? Is it Sunday to Monday? Is it Saturday to Friday? What is a week? It's any consecutive 7 24-hour periods. The employer can choose to start that week at any point. Most employers will start it Sunday midnight, end it Saturday 11:59 p.m. That's the easiest way to do it. But it's during those hours, or during that time period, that those 40 hours are calculated. Now, as I had mentioned, there are 168 hours in a week. But if any hours are worked over 40 and the employee is not exempt from the overtime and minimum wage provisions of the FLSA, then they are required to be paid overtime for any hours over 40 during that week. Okay? Again, if a state's law is more generous, then that is what is followed. There are some employers that choose to pay more than 1.5 times for overtime, maybe 2 times. Something along those lines to encourage employees. They can do that. It just cannot be any less than 1.5 times regular pay. Now, within a pay period, this is usually known as comp time. If it's within the same period and it's within 2 weeks, so if an hourly rate employee works in pay periods of 2 weeks or longer, the employer can elect to give the employee 1.5 hours off for each overtime hour. It has to be within that same pay period. There are certain exceptions to that for public employees where they can carry over comp time. It does have to be 1.5 hours though. So if it's during overtime. So if you worked 41.5 hours or 42 hours this week, those 2 hours, you could carry it forward if the employer agrees, could carry it forward to the next week and take 3 hours off because that was overtime hours. But it has to be within that same pay period. You can't carry it forward more than that. Like I said, there are, where are they here? These are the situations where there are some exceptions to that. If an employee works for a state or a political subdivision or interstate governmental agency, they can be granted compensatory time off. If that employee is in public safety, emergency response, seasonal activities, they can accumulate up to 320 hours of times 1.5, so up to 480 hours. Now, these are only employees who work for a state, political subdivision, or interstate governmental agency, so we're talking about government employees are allowed this. Public safety, that would be police officers, fire people, firefighters, that's it. Employees whose work doesn't include those activities can accumulate up to 240 hours. So they're still allowed comp time, but it's not quite as much. So, and if they have that comp time, they get paid upon leaving their position. So, pays to work for the government. So, is overtime optional? No, the employer can force you to work overtime, even if you don't want to. Employer can say you're working 168 hours this week, and if you don't, you're fired. Now, I don't know many employers that would do that, but they can do it. It's within their rights to do it. They just have to pay you time and a half for that time over 40 hours during the week. But there is no maximum number of hours that an employee can work. Now, hospital employees have some special rules an exception to that 40 hours within the week, they could calculate overtime, because, you know, hospital workers, shift workers, they work, you know, 3 12-hour shifts, and then get a couple days off, and then another 2 days, or, you know, they're kind of all over the place. They don't really work within that 7-day period very often. Overtime for 80 plus hours in a 14-day period, or over 8 hours in any workday, whichever ends up being the greater amount. So that is one exception to that 40-hour limit, is for hospital workers. Retail service industry employees, there are some special rules for them. We don't really get into those. Kind of forgot about those. And exception for if the employee is receiving some remedial education. All right. Questions about overtime? So, I mean, that one's not, you know, overtime's not so hard. There are actually a couple of different ways to calculate it, though, which we will go through on Tuesday. There is, and if you've read ahead in your book, you'll know that there is what's called the overtime premium calculation and then the regular overtime calculation. They end up being the same. You end up with the same amount in the end. And let me just show you real quick the difference between those, because you might have some homework problems that involve them. So the overtime premium approach, actually, let me have a slide that, I thought I had a slide here that talks about that. Maybe I'm getting ahead of myself here. Yeah, I'm kind of getting ahead of myself here. I'm getting to the calculations. Anyway, I'll just go through real quick. So let's say we have an employee that works 42 hours at $10 an hour during that 7-day period. So one of the ways that we can do this, so the regular approach is we'll take the 40 hours times 10, and then we'll take the 2 hours of overtime times 1.5, so 400 plus 30, 430. Easy peasy. The overtime premium approach, we take the full 42 hours times $10 an hour, 420, plus the 2 hours of overtime times, oh, I did 10 times 0.5. Instead of 1.5, it's 0.5. Okay? That gets us $10. Same result, right? Why on earth would we use this overtime premium method? Well, we'll get into that when we do some other calculations. There are some calculations that require you to use the overtime premium method. Okay, when we start talking about salaried employees there are salaried employees that have to meet the minimum wage requirements, and the overtime are subject to overtime. When we do those calculations, we'll be using the overtime premium approach. Okay, just kind of wanted to give you a preview of that. You may, if you're working this weekend on your homework, you may run across that. Let's see here. All right, I'm going to just kind of introduce this exempt versus non-exempt. Exempt, again, means, and I'll write it down here. They're not subject to the minimum wage and overtime provisions of the FLSA. They're still subject to the protections of child labor. They're not exempt, nobody's ever exempted from that. But an exempt employee is not subject to this minimum wage and overtime provision. Meaning, the $7.25 an hour doesn't apply. The hours over 40 hours in a week don't apply. We normally think of exempt employees as salaried employees, but that's not always the case. We have employees who are exempt who are not salaried, and we have employees who are salaried who are not exempt. Non-exempt. Now, this is kind of weird because it's reversed, right? We say exempt, not subject. Non-exempt, they are subject. So we kind of have, we've got a positive and a negative here, and a negative and a positive over here. So it's kind of turned around. But these employees are subject to minimum wage and overtime. Now, I had mentioned before, we'll talk about this more on Tuesday as well. I had mentioned before that exempt employees are not subject to the hourly minimum wage. There is a minimum wage, but it's a weekly salary amount, okay? But they are not entitled to overtime pay for hours over 40 in a week if they are exempt. Your book goes through who is exempt and who isn't exempt. It has to do with the classification of employment. There are certain positions, certain industries where individuals are exempt. So executives, white collar employees they call them. Executives, administrators, professionals, CPAs, business owners, highly compensated employees, computer professionals, creative professionals, and outside salespeople. These are the classifications of individuals who, if they do these jobs, would be considered exempt from the minimum wage and overtime provisions of the FLSA. Okay? This is the minimum wage, $684 a week for those positions. Okay? That minimum wage, that went up, when did it go up? 2017, I think. The Department of Labor sets it. There has been talk of increasing it again recently. But so there is still a minimum wage, but it's on a weekly basis, not on an hourly basis, and there is no overtime requirement in that. All right, we'll leave it at that for today. On Tuesday, we'll go through some more calculations. Some of these things, we'll start calculating you can go if you have to go. We'll start calculating pay. Okay, and go through some examples there. Computing wages and salaries. All right, have a great weekend.